As a business analyst, it is important to find reliable sources of data. At SBA Canada, we prefer to use public sector organizations like Statistics Canada, Industry Canada, BC Stats, Work BC, and the Canada Job Bank. We feel it is more reliable than data from private sector organizations like CPA Canada, which are trying to push their own narrative. Even though government statistical agencies don't have the same kind of agendas as private sector organizations, public sector organizations often interpret the same data differently or use different definitions when aggregating data. For example, BC Stats relies on data from Statistics Canada, but defines large and small businesses quite differently. In British Columbia, BC Stats defines a small business as having fewer than 50 employees. Businesses with 50 or more are simply defined as large businesses. In contrast, Statistics Canada defines a medium-sized business as having between 100 and 499 employees. Businesses with more than 500 employees are considered large. Analyzing statistics for the accounting services industry relies on data gathered by Statistics Canada. However, Industry Canada uses the same underlying data to produce financial reports by industry sector and firm size. The data is invaluable, but still subject to biases in the way data is defined and aggregated.
The Canada Revenue Agency, CRA, first implemented mandatory reporting of the General Index of Financial Information for Corporations in 1996. This system was designed to standardize how financial information is reported to the CRA, making it easier to process and analyze corporate tax returns. This should have been a godsend for financial analysts when reviewing detailed financial information by business sector. And for the most part, it has been fairly useful. But there are a lot of issues with the data. Industry Canada compiles data provided by Statistics Canada and inexplicably gets different results. In a recent 2023 report regarding the accounting services industry, they list 57,776 firms engaged in the industry, compared with 35,167 reported by Statistics Canada. Perhaps they aggregate firms differently, or maybe Statistics Canada simply ignores businesses with less than $30,000 in revenue. Statistics Canada breaks down the number of firms by revenue, which should add to $28.173 billion. They describe the dominance of the top 10 firms who in 2023 accounted for fully 44.8% of revenue. But they fail to disclose detailed financial data by firms with more than $20 million in revenue, including the top 10 firms. When we exclude the revenue of the top 10 firms, there is still over $5 billion in revenue unaccounted for. Perhaps this is done for privacy reasons, but you can download detailed revenue for each of the largest 8 CPA firms in the USA by firm from the NAICS Association in the US for free.
It turns out that these large firms want everyone who listen to know their ranking in relation to the other Big Four firms. As a manager, and later a senior manager with PwC in Vancouver, between 2005 and 2010, it was evident to me and anyone who worked there that we wanted to surpass Deloitte as Canada's largest Big Four firm. In fact, when I used Microsoft's COPILOT service to find out the revenue for Canada's Big Four firms, it wasn't difficult to get the breakdown. Apparently, each year, the 4 Canadian firms publish transparency reports, which disclose revenue earned from audit and non-audit services, though the presentation and amount of information differs, as do the dates of their fiscal year ends. So why is Industry Canada so reluctant to provide detailed financial data by sector when the Big Four firms themselves are required to disclose that information in their transparency reports? Perhaps the relationship between our largest accounting firms and our public sector agencies is a little too cordial. And why do they merely talk of the 10 largest accounting firms when the remaining 6 average less than 1/4 the size of the smallest of the Big Four firms?